Climate change is increasingly visible and disruptive. Yet for most corporations and financial institutions, climate risk is a blind spot. A complex web of frameworks is evolving to secure a more sustainable future while delivering economic growth. To get ahead, you need essential intelligence to see what matters.
As part of developing a robust climate change strategy for a business, for a company, it's critical that they consider different scenarios for climate change action and use them to inform that assessment of climate change risk. These scenarios are narratives of potential futures, and then from that we can tease out detail on energy mix, carbon pricing, customer preferences, technology uptake, and also the physical impacts of climate change.
From my observations, a good number of Asia-Pacific organisations are taking climate change seriously. They've recognised climate change in their reporting. Some have gone as far as to make commitments to reduce their climate impact. One way to assess this is the adoption of those initiatives and frameworks for climate change scenarios like TCFD. And formal supporters in Asia-Pac make up about a third of the total global supporters, as at November 2020. So that's a pretty strong indication of how Asia-Pacific compares to the rest of the world.
I think we do talk about climate scenario analysis in terms of definitely getting that sort of output. But very importantly, I think for us, it's also building that capacity for the company to understand and appreciate the nuances of what climate scenarios could look like. Even, hypothetically, there is like zero data. Having that sort of framework and guidance and thinking as a start, I think it's still extremely important and also lacking in this region. To summarize, TCFD again, building your climate literacy and trying to see what collaborative opportunities there are.
Climate risk is just a misconception that it's long-term, it's not near-term. It's actually very near-term. Because you're planning now for 10 years ahead, even a simple comment, 5-10 years ahead, you have climate risk. You have supply chain, if you have all your factories in China or in Bangladesh or Vietnam, close to the river, so you're going to have that kind of disruption supply chain. And you have other related risks. Or another case, real estate in Shanghai, projection, extreme temperature, 3 degrees higher, which leads to, for that real estate, $500,000 just energy costs. So what do? You plan a better cooling efficiency, energy efficient building, greener building, and you do it now in construction stage, not later, and you have to tear down things. So it's not a long-term risk, it's a very short-term risk.